Welcome to the recording of today's Wealth Accelerator webinar number 7, Investing in the Five Layers of the AI Cake, as that phrase has been coined by Jensen Huang, talking about the AI infrastructure. Of course, most of you know me, but for those of you who may not, who had this video forward to you or otherwise, my name is Todd Dolshall. I'm a financial advisor with Elevator Retirement Solutions. And the purpose of today's session is really to really accomplish a lot and demystify a lot of the confusion and stress around the stock market, especially as relates to artificial intelligence. It's really been the buzzword of the last couple of years. And given, of course, all the news going on with the markets, et cetera, this is only continuing to get more attention and more capital invested into it in different ways. So the goal here today is to talk about what's real, where to verify, get good quality information from the government, the SEC. Secondly, talk through the different layers of investing, pros and cons. And ultimately, of course, anything that we discuss today is not meant to be individual stock advice in terms of investing, financial planning advice, etc. Please reach out to me with my contact information here on the slide, and we'll be able to bounce ideas back and forth and discuss how we can fit these ideas and concepts into your portfolio and your financial plan. So with that, we will go ahead and get started. So as I mentioned, today's agenda, we're going to share resources that previously have been recorded here. Like I mentioned, this is the 7th Wealth Accelerator series I've been doing now on a quarterly basis for 3 years. Really excited to have you as a part of this process here. We're going to discuss the massive opportunity in artificial intelligence and why it's getting so much attention, where to find deep research and key financial numbers, as well as the 5 layers of the AI cake. First off, in terms of the previous recordings for the Wealth Accelerator webinar series, you can take a look at my website here, which is shown here on the screen. Google my name, etc. Elevator Retirement Solutions, you'll find that as well. And you can go to the sessions here under the video library, click the most recent session that we did on geopolitics, just when the trade wars and everything else was breaking out, especially in the Middle East. So just a lot of great content there. And of course, if you have any questions, don't hesitate to reach out to me. What would you like to hear about next? Okay, so in terms of the long-term investment mindset, arguably behavioral finance is the most important aspect of what separates really successful investors who feel really comfortable and confident with the long-term investment mindset versus those who may be more stressed and more susceptible, shall we say, to the news and the overstimuli that's going on right now with social media, artificial intelligence generating lots of material. And it's really hard to tell what's real and what's credible and what's not. It really reminds me back in the day in elementary school when we still had note cards and had to use the Dewey Decimal System and always check to make sure there's at least 2 sources of information, right? The basic premise of the scientific method, right? So as we get into a world of information overload, whereas before it was much more difficult to get that information in a timely fashion, that process still works very well. So not necessarily being skeptical, right? But really making sure that whenever you're looking through something that's verified from multiple sources, especially if it's generated from AI, because as we know, AI has a tendency to hallucinate, which means that it'll just make things up or pull information from less than credible sources, unless you really know how to work with it and are a true AI expert. So when it comes to investing and for the long term, one of the previous sessions that we did was discussing the growth prospects of this industry over the next decade. From various economic studies I mentioned in one of the previous sessions, AI clearly is the biggest and fastest growing sector in the entire world, and especially in this country. So knowing that that's the case, that's where most of the money is going from a CapEx perspective, which is capital expenditures. It's really important to understand where is this money going, what's the return on it, what's the risk, and is this something that you should consider as a part of your portfolio, and if so, how? Really, the thing that's I think a lot of people really struggle to understand is that everything, especially in AI, is really an ecosystem of layers that are all codependent upon each other. We certainly saw this after the pandemic, the issues with supply chain, of course, being shut down across the world and opened up in very fragmented ways. That was a very tough situation to deal with. And now we're at a point now where understanding that as relates to the AI infrastructure is also incredibly important. And how do you work with it from an investment perspective, understand the risks and the importance of diversification, and not shying away from risk when it can help you achieve your goals, but also not going overboard either. It's that happy medium, so to speak. And patience and discipline. Arguably, those are the two most important words on this slide when it comes to behavioral finance and investing. Patience is number one, and then discipline to stick with it. Just because an investment that you invest in goes down doesn't mean that it was a bad investment. It just means that the market had an unfavorable reaction to whatever news interpreted that day. And oftentimes, those short-term downturns are rebounded by very steep inclines and vice versa. So, again, when it comes to this, having a long-term mindset isn't a surefire way to make money, but if you look at the studies going back and forth around passive investing and having a strategy versus active with discipline and behavior, ultimately holding on to the investments with a professional such as myself, doing on your own, etc., can really help a lot. And it's really, especially comes into play with the topic of getting into portfolio management, making investment advice, and with different studies that we've seen out there. Can't comment on any particular study, but if you are using AI for looking at investments in your financial plan, love to take a look at what you're working on and help you get a second set of opinions here because I do this all the time for clients that I work with. Okay, so the most credible source when it comes to getting good qualified information in terms of investments and earnings is the SEC earnings website here. So as I always say, when it comes to government websites, very important to always take a look and make sure that you see a .gov at the end, the official logo here with the United States government, and ultimately, if you're really unsure, talking to a data and security expert. But in terms of all publicly traded companies, which is what primarily we're talking about from an investment perspective, every company has to report earnings on a quarterly basis. And you can go into the SEC website, get the data, see the income, see the balance sheet, profit loss, without all the fluff that you may hear on the news and on earnings calls if you're listening to earnings calls from companies. A screenshot here just as an example of Alphabet, which is better known as Google. Again, I'm not making recommendations to buy Google, but it is a company that most of us know and use on a regular basis. So good reference point for here. So here's a screenshot of one of the most recent reports that I pulled from April 30th, 2026. And when you search for Google in the SEC website here under company results, it'll show you a few key pieces of information. We'll show you the 10Ks. Those are the annual financial reports that they have to disclose. A lot of great information there. Quarterly 10Q reports, so that's the quarterly earnings reports, just again without all the fluff, shall we say. And then 8Ks are also really good because that shares statistically significant information that's newsworthy, such as a board member being voted off, a new one voted on, votes, initiatives, etc. So, of course, any questions on any of this, that's what I'm here for, right? These are the kinds of things I look at all the time and really enjoy digging into this. So don't feel intimidated by this. But for those of you who are maybe more of a do-it-yourselfers or wanting to get us a few different sources to look at, there's none better than going straight to the source that regulates everything in the SEC. Okay. And to summarize that again, just because that website was a little busy and it's not exactly the most visually appealing website, as government websites often are. A few things to look for is the primary financial data without all the fluff that's going to highlight the financial health and strategic priorities that they're focusing on. Analyzing key SEC forms that investors like to look at, 10Ks, 10Qs, and 8Ks that we referenced. This will help track long-term trends, quarterly changes in corporate events. And of course, if you're interested in looking at artificial intelligence or capital expenditures, you can simply type in search filings that use those keywords, and it will pull up a number of different companies that are focused on this with news, etc. So just a great way to go straight to the source, so to speak, from a credibility standpoint. Okay. So now that we've gotten that out of the way, so to speak, now let's jump into the AI ecosystem and the five foundational layers of this delicious cake. So number one is energy. So arguably this is the most constrained area of the AI ecosystem supply chain. Energy, energy, energy. At least in this country, in the United States, as of the recording of this session here in the spring of 2026, energy really is a huge issue at this point in the country here. We have a massive imbalance between demand and supply, too much demand and not enough supply. And that's why we're seeing all kinds of data centers being developed. Nuclear power plants are coming back online. We're starting to see all kinds of creative options with solar as that becomes more cost effective than traditional sources of energy, such as coal, for instance, that's not as profitable anymore. And innovation, of course, ultimately will drive that as well. So having a community and an ecosystem that really supports the energy infrastructure is critical because without having energy, my understanding, reading all the reports and research from AI experts, ultimately it all starts with energy. So could be a great way to get into investing here because at the end of the day, we all need power at the end of the day there. So, and then if you have any questions on particular stocks you're looking at or sectors within this component, don't hesitate to reach out to me because I've got a fair few ideas and I won't share with this recording just because I don't want to be giving away investment advice on this. Number two, more in the news has been chips and semiconductors. Most notably, the biggest company in the world from a market cap perspective, other than Google, is NVIDIA as of May 2026 when I'm recording this ahead of the session. So clearly, semiconductors are the backbone of our technology ecosystem. We use them not only in artificial intelligence data centers, we use them in everything from computers, even mouses, like I have here. Cars run on some semiconductors, and it's the backbone of Silicon Valley, and really what makes everything possible from a compute standpoint. So, investing in semiconductors, if you know what you're doing and have a good price strategy and exit with price per earnings ratios, price over free cash flow, debt to asset ratios, so on and so forth. All the things that I track for investors, it really can be extremely lucrative if you buy with a long-term incentive in place and understanding when you're going to get out. From that perspective, chip challenges and dynamics. There's a few different debates around this. Is it better to go for the highest end chips, or is it better to pull together lower cost chips into a bigger aggregate, which we're starting to see a number of different pros and cons as relates to what we're doing in the US at the higher end chip market versus, say, China, which has a very robust energy supply and is pulling together more and more semiconductors to have a similar effect. The details of compute power and effectiveness, that's the multi-trillion dollar question in debate, and you're going to get all kinds of opinions about that. But ultimately, as with anything, the beauty about the free market is it does give us more choices because there's a lot of profit to be had, at least as of now. And that creates a lot of entry into the market, and it's going to ultimately continue to bring down and pressure these companies to become more and more effective and more competitive from a price standpoint. But when it comes to this, looking for companies that have a strong economic moat is really critical. So do they stay in their lane? Are they trying to be all things to all people? Or do they really have a niche at the higher in the marketplace and they stick to that? It's probably a better business plan to have a company that's consistent versus one that just has a shotgun, take anybody as they are, because that becomes very difficult to scale. Okay, so layer number three is of the AI cake is going to be infrastructure. So the infrastructure primarily comes in the form of a few different areas. Cloud computing services and platforms, that's where data is held. Data centers have been wildly in the news, as they should be. They come with some positives as well as some challenges, which ties back to the energy infrastructure issue. So the problem here in the United States, as of now, is we just do not have enough energy in this country. That's full stop. And as a result, we're seeing the cost of data centers going into these communities. That's actually rising and increasing the utility bills for the residents that are there. And we can debate whether that's fair or not. Personally, I have a major issue with that. The residents of these communities who aren't owners of these companies, effectively subsidizing the infrastructure for these multi-trillion dollar companies, that's an issue. Then that's something that needs to be debated in the public forum. But as with a lot of things in the news, we were in the United States, we rushed to roll it out to have a competitive advantage. And that creates a lot of innovation, and that's really wonderful. The downside with that type of a strategy is that we don't have time to really assess all the pros and cons and implications, similar to what we have seen with the unintended consequences of the internet, social media, etc. And hindsight is always 2020 on these topics here, so we'll keep that grain of salt, so to speak. So we have some humility there, and but ultimately, when it comes to this, the infrastructure probably a really wonderful investment opportunity here because there's a huge demand, huge need, and at this point is again one of the biggest areas that's undersupplied with a massive ever increasing demand at this point. And a great way to look at this in terms of how much money companies are spending on data centers and capital expenditures is to look at what's called CapEx on the company's 10Q for the quarterly updates, or of course the other ones that we look at as well, 10K, so on and so forth. Okay, so the fourth layer of the AI infrastructure is models. Models. You'll probably ask 10 AI experts in terms of which models their favorite and why, and you'll get 10 very different answers as to what model they like the best and why. There's a arms race, so to speak, going on right now as we're recording this session between Anthropic, which has Claude Code and Claude AI, OpenAI, of course, with ChatGPT. There's obviously Microsoft's Copilot as well, which is a big enterprise company as well. So there's dozens and dozens and hundreds potentially of models that are out there in the world to use for large language models. And what that does is it takes information, scrapes the internet from various sources, which that's a very hotly debated topic, especially from a legal perspective with copywriting, etc. So having licensing arrangements is really important for them. Taking that information and then answering your question or your request with prompting, which is level one of AI mastery, so to speak, and then sitting down, of course, and looking at what's a potential risk versus reward. As we look at this, there's not a lot of publicly traded companies in the AI model space yet, but with some large IPOs or what are called initial public offerings. We have Claude that's going to be coming out with Anthropic, of course. We've obviously got ChatGPT that's going to be going public here very soon. But again, before you rush to any of those concepts or those ideas, just remember that when it comes to initial public offerings, ultimately, that's something that really warrants a lot of scrutiny, a lot of skepticism, because at the end of the day, oftentimes we see the core leadership and equity transfer from the founders and the core owners to the public. So the incentive, if you will, to manage that company the same way goes down as they reduce the percentage of their shares potentially. So again, all things that you can see on the SEC website to track that. So something to consider as you're looking at investing potentially in any of these companies. And for any specific questions you have, again, that's what I'm here for. And then I think it's kind of interesting to point out the last point here is that according to a number of different resources, whether it's SHRM or other resources that are out there at the national level, AI adoption in the United States is far behind the rest of the world. And there's a few reasons for that, and that's we can debate that later. But ultimately, there's a huge literacy gap compared to the rest of the world, and whether that's a good thing or a bad thing, that's up to you to decide, right? And history, of course, will teach us what's right there. But the point here is that there's a huge opportunity for more penetration into the marketplace with AI models with the United States as more of us become more and more comfortable using it, being forced to use it for work, etc. And as with any new technology, new innovation, once it's approved by your employer, ultimately, of course, assuming that you're following the AI compliance handbook that they hopefully have on file for you, I would encourage you to take a look at it, start playing around with these tools, using them in a safe way, and avoiding using PII, personally identifiable information, and experimenting, because if we don't embrace these tools, ultimately, eventually, we will fall behind, similar to those who refuse to adopt smartphones, the internet, etc. So Whether the AI is going to become bigger than any of those tools or not, again, hindsight's always 2020. But when it comes to competitive advantage in the workplace, companies you're building, nonprofits you're managing, volunteering on the boards of, etc. AI can be a phenomenal way using large language models to synthesize complex tasks and data and really streamline things in a very efficient way for you. Layer five, that's yet to be seen as applications. So this is where you take the concepts of a large language model such as ChatGPT, Claude Code, so on and so forth, and actually use it in the real world, right? And this is where the value is monetized. So companies are really racing right now to adopt this internally, externally. There's new companies that are being formed at a very massive scale at this point, which is all becoming easier and easier to start because of AI. But as with anything, there's also a lot of slop out there and fluff. So just because there's more that's starting doesn't mean that it's better, right? So as quantity goes up, you really have to be even more laser focused on quality outputs, quality deliverables, keeping things secure, and monetizing that in a way that's ethical for what you're trying to do and build. Okay, so when it comes to key takeaways for investors in discussing portfolio construction, having a diverse framework, I think probably makes the most sense for most investors, right? We don't want to put all of our eggs in one basket, as they say. You don't want to put it all into chips. You don't want to put it all into energy, large language models, when more become publicly traded later this year, so on and so forth. So having a diversified approach, investing in each of the five layers in a way that makes sense to you can be a great way to potentially achieve a higher risk adjusted return, right? And understanding what you own inside them. And if you're not comfortable with investing with individual stocks, there's all kinds of ways to get into them with ETFs, passive managed ETFs, mutual funds, and so on and so forth. But of course, as with anything, the problem with that potentially is you don't necessarily know what you own inside of it, right? So digging in and really examining what you own and why ultimately can be a great tool and strategy from an investing perspective. Balancing stability and growth, right? So is your primary goal for investing, is it growth? Or is it for stability? If you're, say, collecting an income and you're retired, right? Or is it a combination of both, right? That's going to determine how you invest, how conservative you are, what the goals are. Do you invest in companies that pay dividends that you can generate some income from on a tax efficient basis in non-qualified accounts? Or is it something that you're looking for just growth period, for more for estate planning purposes? And that should help determine and set up the framework for how you invest. As we discussed, diversification is very important as this is still very green and new field, so to speak. Definitely not green from a energy usage standpoint in the planet. Lots information I'm sure is going to come out about that, but it is relatively new, everything that we're talking about here. So really important to not listen to one single narrative. And when it comes to AI language models, you hear about coding bias as another potential problem and challenge with it. So again, diversification is the theme of the day, so to speak. And last but not least, patience and having a strategy to analyze this. So investors can potentially benefit from having more patience, taking a fundamental look at the analysis and the structured frameworks for a confident AI investment, whether that's something they're leveraging AI directly, work with an advisor who's using AI, such as myself, on a compliant basis, advisor who's not using AI, etc. So ultimately, again, when it comes to this, never believe anything you hear at first glance when it comes to AI until it's been verified by at least one source. And when in doubt, when it comes to publicly traded companies, going to the SEC website for earnings season, that's a great place to go for the most credible sources. Okay. So with that, I hope you enjoyed today's session on investing in the five layers of the AI cake. This is a multi trillion dollar opportunity from an investment perspective, and it's projected to be the fastest growing segment of the entire world, and especially here in the United States with all the companies that we have here. Again, anything that we discussed today is not meant to be taken as gospel or investment advice. Market conditions do change, and of course, the circumstances around everything we're talking about can change. So don't hesitate to reach out to me with any questions, thoughts, comments, and would love to hear your feedback after today's session. And please, if you found this really helpful and valuable, please share this with someone else who might find it enjoyable so they can learn more about this, whether they choose to work with an advisor such as myself or not. Thank you so much for your time. I look forward to seeing you next quarter. Thank you.